JB here. Hope everyone's doing outstanding. Wednesday, April 9th, 3:17. On this fine Wednesday afternoon, talk quick about the market, some names. I'm going to go from there. I put share my screen in the chat room. So if you're in the chat room, click on stream and you should be able to see the charts, right? If you can't, no big deal. It's recorded. It'll be uploaded in about 10 minutes. What another crazy day. I think I posted earlier the ranges on the S&P today 8.66, depending. I mean, if we hit more highs here over 530 on the SPY, it'll be more than that. Yesterday 7.27% trading range. Monday 8.5%. Friday was over 4%. Just crazy stuff. The good, well, the bad is the premiums and the implied volatility is so high that it makes it tough to find decent strikes on a risk reward basis. Uh, so that's why got to either be you got to well, tomorrow's gonna be a good day, or even Friday. Friday be better because the premiums will come out of weekly strikes, but hopefully more opportunities. But what a crazy set! It's like, I think, since Monday, you could see how the market was just waiting for some kind of update, and even people on the side of uh, on Trump's side, Republicans, what have you, that have been supporting him, you start seeing cracks in that support. Not cracks, but like, come on, man, you gotta do something. This is not good. This is not good. And then finally, um, finally came out with some. Who knows? I mean, the Treasury market last night, kind of, that's spooky stuff, right? I mean, there's things, yeah, not that you control the market. I mean, but at some point it becomes to a point of no return. So I'm sure there were some concerns last night, and I'm surprised they didn't come out with last night. That probably could alleviate some things. But anyway, so overall market, I was talking about 482 on the SPY. Thankfully, didn't get down there. I was talking about the gap fill yesterday. I'm like, okay, maybe a gap fill by the end of the week. We filled the gap today. So just crazy stuff. And yeah, so, the playbook today, got those SQQQ calls yesterday, locked most of them into the end of the day yesterday. I said I was going to lock more in at the open, did that, held a few as a hedge, and then it was kind of rocky in the morning. Lucky to get some more spec calls once we were breaking 500. Put that on the watch list. Walmart was the name I'm watching, so I grabbed some of those. And then the chip names. And, I like Intel just because of the change in leadership. Stock is substantially off its high just a couple days ago. Thought that was a good opportunity. Got some of those calls. And then the rest is history. We got that tweet and just uh, monster move here. So where do we go from here, right? That's the big question. I mean, it's still going to be uncertainty. You just had Goldman Spectacular removing the recession warning. I'm sure you can have a lot of these analysts and folks who have become extremely bearish over the last day or two, probably flip their tune a little bit. And then now, what does the tariffs look like, right? So you got to take that back to the drawing board, right? So they pretty much, that drawing board last Wednesday was just a prop piece because all those tariffs aren't going to matter anymore. It was just a negotiation ploy, I guess you would call it. But I mean, it impacted lives and markets. And so I guess we'll see how this all plays out. But you still have the uncertainty. So what does this all look like? The good thing is, I think the worst case scenario is kind of like off the table, right? 440 on the SPY, and bear market. Or recession. I still think, and the economic data had pointed to a strong economy still. So I still don't think we're headed to recession. Some people still argue that point. I kind of almost did it sarcastic today, and I was mentioning yesterday before that if folks who went out and got all these products ahead of the tariffs, right? They didn't want to see costs rise in clothing, electronics, even groceries, liquor, whatever it is. And I'm sure there's ramped up demand and consumption, right? There's a lot more buying just because of that cars. And now it's possibility those tariffs don't impact if some, or if not at all, right? Who knows if the costs are not borne by the importers and exporters, by the suppliers or whatever. So how much is that baked into the recession models? This pent up buying sprees or whatever. So half of it's with a little sarcasm, but the other half is like, oh, there's 540 on the SPY. Half of there's got to be truth to that. So uh, for me, I'm going to continue to be cautious, and not because I want to be, and not because I don't think we can get up to 570 or so on the SPY in the next week or two, but because I get the premiums are elevated. So not only that, I still have some strikes, so I'll continue to hold those. But we're down here, 540 now. Maybe we're up to 555, 560 by the end of the week. I mean, that would be crazy stuff. But I think we have CPI data tomorrow. Obviously, now that there's more importance on that, but I think that's gonna be cooler expectation. And we have earnings on Friday. You have Jamie Dimon, who's been talking all week. He'll be talking about stuff. So I think all things considered, at least maybe premiums start to come down, so the environment becomes a little bit more tradable. And then as opportunities present themselves, I'll look to get some stuff. I mean, some of these names, you look in my watch list, I have to scroll all the way down to find names that aren't up over 10, 12, 14%, 20%. So definitely not the time to go chasing names, but because even tomorrow we could rally again, but some of these names might rally 3 or 4%, and then the premium is going to evaporate, right? So they might go up 3 or 4% tomorrow, and your calls will still be red. So that's kind of the thought process there. All right, so that's kind of overall market. Also the gap fill, right? So we got the gap fills. That's all good things. I mean, I'm not saying we can't reverse here or there can't be more chop over the next coming days, but kind of in my head, I'm just trying to rationalize things. We have the earnings season coming up, so all right, so now individual names. So Walmart was the name I had mentioned on the rant and the watch list this morning. They have their investor day today. Comments out of CEO was kind of, I wouldn't say bullish, but not bearish, right? Pretty much dismissed the tariffs, said they have tools and pricing mechanisms to be able to keep their growth. Talked about their online growth strategy really being good for Walmart. And so take a look at it. I mean, the name was $90 a couple of days ago. It was down at $80 coming into today. So once it started, market found some footing. We were over 500. I got some spec calls that expired this week. And then, as it was running up, I closed some out for 100% or close to 100%. And then, we got that news, and they expire on Friday. Walmart's not a name I typically trade, and it's not the most volatile name. So then we want to be in a spot where it reverses a buck and the premiums come out. So I closed more out for a little over 200%, and then the last out for almost 400%. And then that's it. I'll be done with Walmart. Wash my hands. I made some money on that today, but a nice, good for Walmart. I mean, it's good for the markets that they were able to kind of like give a little confidence to the market. So that's Walmart. And then I was looking for other names to trade for tradable bounces into the end of the week. Chip names are going. I was looking at AMD, NVIDIA was going, and then of course my old friend Intel. So it was down to $19. I was actually looking at 2250s. They were like 16 cents. In hindsight, maybe I should have went and got those, but needless to say, went and got those 22 strikes. Stock was in the 19s and 1980. And then we had the spike. I was able to close some out for 100%. And then, I'll just hold the rest because they expire next week. Have plenty of time. I think maybe it gets 23, 24. So nice little setup there on Intel. I mean, you take a look. Friday was over 22. Thursday was, let's see, Wednesday, Tuesday, Monday, Friday. Yeah, Thursday was $24. So not saying it gets there tomorrow or Friday, but I have time. And if it gets to $24, 22 calls, going to be a monster bagger. So nice one there. Deckers, right? Held on to my strikes. Looked like they're not. I have plenty of time after April 17th, but they were looking great when I got them on Monday. Then Tuesday we have the reversal. Thankfully we got the news, right? We got the kind of what I was hoping for. And then take a look at Deckers rallying. It's up nearly 15%. Lock some of my calls out for almost 300%, 250, and then I'll hold the rest because I think Deck's going to head over 120. So nice little story there. Nice bounce play. And again, some of the reason why I'm not going to add more calls here because of all these names I'm in. Wayfair, another name. I mean, it's just waiting to bounce here. And I was looking at those candles. I mean, just monster candles. But another name up 20% here today. I don't think that's going to take much trade in mid-30s. But again, the premiums are nuts on the call. So lock more of my strikes that I got in last Friday in for close to 500%. I'll just hold. I just have a couple left on those, but small can become big in this environment. So who's to say Wayfair is not 35, $40 next week? As crazy as that sounds, or higher. And then last but not least, here's Restoration Hardware, which is hitting highs right now. My calls were almost 10 bags a little while ago, but I'm like, I only got a couple left, so I might hold for like 215 or something. Call me crazy. In the 200s now. Yep, they're 560 by 850. So I'm sure if I put my order at $7, they would get filled. But I just have a feeling, not a feeling, but you look, it's got the gap from earnings. Not saying it's going to fill the gap, but it's like pent up. It's like people buy. So call me crazy, so I'll hold those. But I wouldn't be surprised if I'm going to be closing those out for 20 bags before the week is out. Monster one there on RH. And then some other names I'm in. I mean, I still have those ROKU 75 strikes in the next week. They were almost a double a little while ago. I'll just hold on to those. That'll be gratifying, probably more gratifying than some of the other trades if I'm able to get out of these ROKU strikes for some nice gains. That's ROKU. Then the SQQQQ. I'll just hold those. And I don't want to say the market's out of the woods just yet, right? I mean, it's some of this still has to be resolved, and who knows, this tit for tat with China could turn into something much more. Not only economic tensions, geopolitical. Now you have Taiwan. If this escalates into something bigger, I mean, do we have to start worrying about Taiwan? So, and that'd be a huge deal. So you just can't rule some of these things out. And now you also have to think. I mean, everything's all rosy right now. Who's to say you don't have Fitch coming out with a U.S. debt downgrade, right? They were watching the yields and treasuries yesterday, right? I mean, that's how U.S. finances their debt, right? The yields continue to rise. Obviously, that's not a good thing. And with the logjam sometimes trying to get the debt ceiling going and things like that, uh, not all all those different factors. So I try to keep things in perspective, because right now, of course, I would love to grab the bull by the horns and just go loading up on some calls. But if I do get some strikes, it'll be small, speculative in nature, probably weekly strikes, until the market kind of like chops around, maybe consolidates. And then, yeah, that's it, folks. Let's have a great day. I'll be back on audio later. Rock and roll.